Hi learners, before moving to this video, I would like to request everyone watching this video to subscribe the channel for more such interesting case studies. This case study explains how Domino's won the India's pizza war. This case study also explains the various USPs and strategies which Domino's adopted to become the market leader in India. The fast food market has been booming in India for the past few decades. The pizza market in India is valued at over $1.5 billion. That's small when compared to the US market, which is worth $46.7 billion. But still, the market is huge considering the huge population that India has. Smoking Joe was the first chain to open in India before Domino's and Pizza Hut set their foot. However, when Domino's and Pizza Hut started their operation in India in 1995 and 96 respectively, the pizza market was much smaller at that time. The pizza industry is growing on par with the fast food industry at a healthy rate of 25 to 30% year on year. This category is still in the growth stage and the country can take up to 500 more stores. Jubilant Foodworks started its business under the name Dominos Pizza India Private Limited in the year 1995 and opened the first outlet of Dominos Pizza in 1996. In the first quarter of 2014, Jubilant Foodworks inaugurated the 700th Dominos Pizza outlet. After being in operation for over 20 years now, Jubilant Foodworks has over 1,300 Dominos Pizza outlets across 282 cities in India, making India the second country after the United States to reach the 1,000 store mark for Dominos Pizza. The company aims to double its outlets by 2021. Domino's has a market share of more than 70%, and it also has a 6% share of the total QSR, which is quick serve restaurant market, which clearly makes them dominant in the market of pizza in India. In June 1996, Pizza Hut made its foray into India with a restaurant in Bangalore, and it was the first international restaurant chain to pioneer this category. Initially, the company operated company-owned outlets, which is COCO outlets, however keeping in line with its worldwide policy where Pizza Hut was gradually making a shift from company-owned restaurants to franchisee-owned restaurants. Pizza Hut made the shift in India too. Now their operation in India are 100% franchisee-based, where investment for opening new outlet mainly comes from franchisee partners. In 2011, Pizza Hut had 131 outlets in India. Now they operate around 422 outlets, expanded especially in Tier 2 and Tier 3 cities. Pizza Hut plans to open over 200 outlets in India by 2022. Along with store expansion, they also focus on product innovation and ensures that they deliver the best pizza experience to consumers across geographies. They also expanded fast casual delco FCD concept, and now they have over 58 FCDs till date across India. Pizza Hut relied on its USP of dining experience. Unlike Domino's Pizza, Pizza Hut wants to focus on more than just pizzas. It has offerings like pastas, appetizers, and a large collection of beverages. This is part of its strategy to make the transition from a quick service restaurant to a casual dining restaurant. And the introduction of wine and beer in a few outlets is also a part of the strategy. This strategy also acts as a differentiator from their rival Domino's, whose core strength has been home delivery. Its trademark dining experience has been recognized by Brand Equity as the most trusted food service brand in India for 11 years in a row. As per Domino's India, it enjoys a database of around 20 million unique customers, which shows its hold on Indian pizza market. The 30-minute or free delivery really helped to build a firm trust in the brand. It even connected with government when it started pizza delivery to railway passengers from 2015. Let us see some of the factors and the strategy used by Domino's in order to become the market leader in India. The major competitor of Pizza Hut is Domino's Pizza, which believes that people eat pizza because they want to enjoy the authentic taste. Considering this view, Domino's experimented with flavors like Chettinad chicken in their past. Later, they realized that regional flavors did well initially because of the novelty factor, but could not sustain themselves over the long run. Hence, Domino's answer to innovations are the cheese burst pizza or the 3-cheese pizza, which are made only for India, and they are exotic, and they also retain the international influence. When Domino's entered the Indian market, the concept of home delivery was still in its nascent stage. It existed only in some major cities and was restricted to delivery by the friendly neighborhood fast food outlets. However, Domino's was not the trendsetter so far as home delivery was concerned. Delhi-based fast food chain Nirula's was the first to start free home delivery in the year 1994. But where Domino's stole the market was its efficient delivery record. For keeping up with its delivery promise, Domino's followed a 11-minute schedule. 1 minute for taking down the order, 1 minute for pizza making, 6-minute oven time, and 3 minutes for packing, sealing, and exit. Moreover, analysts felt that pizza was something that was not meant to be delivered. If you don't eat it fresh, it turns cold and soggy. However, Domino's seemed to have overcome this problem as well through its delivery pack called Domino's Heatwave. Pricing acts as a huge differentiator in the pizza market. With competition increasing from Pizza Hut, Domino's introduced price cuts, discounts, and freebies in order to attract the customers. Trying to undercut the competition, Domino's is serving some of the lowest priced pizza in India. Domino's offers at a lower price than Pizza Hut. When they first launched in the 1996, not very many people wanted to have a pizza, so they first had to bring them to the level of acceptability. That you come in and you have a pizza, or you wanted to make them order for a pizza. Also, if you look at the kind of prices that they charge for their awful pizzas, which would be for, I think, if I have to put it across in American dollar terms, which would be less than $1 for a middle class in India. Domino's adopted a new strategy in India for driving a sustainable and profitable growth. The key pillar of this strategy were product improvement, value for money, seamless customer experience, and superior technology, all enabled by a focus on cutting costs and driving efficiencies. This was also supported by a 360-degree marketing campaign that included television, digital, press, and radio. As a part of cost-cutting strategy that aimed to improve margins and increase efficiency, Domino's also undertook a manpower optimization exercise, which discontinued their popular buy one get one offer, reduced the number of staff per outlet from 25 to 22, and also closed some of their outlets. Domino's also announced that they will go slow with their expansion and are only planning to open 40 to 50 stores in each financial year. Domino's has shown everyone that standardization of taste and quality is very well achievable no matter how big the enterprise is. With over 1,000 stores in just over 20 years and the goal of another 1,000 more in another 5 years, Domino's India has shown what it looks like to be successful. The new and improved pizza has indeed struck the right chords with the customers and hopefully will re-establish Domino's India as the ultimate pizza brand in the country. Thank you everyone for watching this video. For more such interesting case studies, please subscribe the channel 5 Minutes Learning in YouTube.